Welcome to the program. I'm Okbayemi Owoshini. We start off with business news. Banks, insurance companies, and other financial institutions in Nigeria will henceforth report monthly transactions above 25 million naira for individuals and 100 million naira for firms to the tax authorities. Now, this directive was contained in the Nigeria Tax Administration Act, NTA Section 29, which is among the new laws which will come into effect from January 2026. Now, the new laws also include the Nigeria Tax Act of 2025. Furthermore, the NTAA also stipulated that banks and other financial institutions will act as third-party debt recovery agents only when all legal avenues have been exhausted. Still in the world of business, the Debt Management Office, DMO, has announced the completion of its federal government bond auction with above 186 billion naira allotted across two reopened bond offerings. According to figures released on the DMO website, the auction fetched 39.075 billion naira in total subscriptions for the 5-year FGN MPR 2029 bond and an impressive 261,597 billion naira for the 7-year FGN June 2032 bond. The auction held on July 28, 2025 featured the reopening of two previously issued FGN bonds, the 20 billion naira for the 19.30% FGN APR 2029 bond with a 5-year tenure and the 60 billion naira for the 17.95% FGN June 2032 bond with a 7-year maturity. We'll go on a break now and be back with an update from the corporate world. Welcome back. Now, Dangote Petroleum Refinery and Petrochemicals has withdrawn its lawsuit against the Nigerian Midstream and Downstream Petroleum Regulatory Authority, the Nigerian National Petroleum Company Limited, and 5 other petroleum companies. The case filed at the Federal High Court in Abuja was formally withdrawn by the plaintiff's legal team. However, details of the decision, including the relief sought and whether an out-of-court settlement was reached, to remain unclear. In the suit, Dangote Refinery had requested the court to award 100 billion naira in damages against the NMDPRA for issuing import licenses to some marketers and allowing the importation of petroleum products. The Corporate Affairs Commission, CAC, has threatened to delist 100,000 companies from its register over prolonged inactivity and non-compliance with statutory requirements under the Companies and Allied Matters Act. The move forms part of the Commission's broader effort to sanitize Nigeria's corporate registry and also ensure that only active and compliant entities remain in the system. A public notice issued by the Commission said the affected companies have been identified as either not carrying on business inactive for at least 10 years or failing to meet regulatory obligations, particularly the annual filing of returns and disclosure of persons with significant control. It's time for another break, but when Money Matters return, we're discussing the decisions of the Monetary Policy Committee at the 301st meeting. I'll bring you details of this after this break. Welcome back. The Manufacturers Association of Nigeria has stated that the decision of the Monetary Policy Committee of the Central Bank of Nigeria to maintain the monetary policy rate at 27.5% over the years has impacted the manufacturing sector negatively. Now, you recall that the MPC at its 301st meeting maintained its current MPR rate at 27.50% stance until risks to inflation recede sufficiently.
The committee decided to maintain the current monetary policy stance and hold all policy parameters constant as follows. 1, retain the monetary policy rate, MPR, at 27.50%. 2, maintain the asymmetric corridor around the MPR at plus 500 to minus 100 basis points. 3, retain the cash reserve ratio, CRR, for deposit money banks at 50% and for merchant banks at 16%. And 4, keep the liquidity ratio unchanged at 30%. The decision was premised on the need to sustain the momentum of disinflation and sufficiently contain price pressures.
MAS Director General Segun Ajayi-Kadri said his association was deeply concerned about CBN's continued decision to maintain the monetary policy rate at 27.5%. Now, that's despite a global wave of interest rate reductions aimed at revitalizing economic productivity and combating stagflation. Now, let's discuss the decisions of the Apex Bank during the 301st MPC meeting and the concerns of the Manufacturers Association of Nigeria. Financial and economic analyst Vincent Oshoma now joins me on the program. Thank you for joining me on the program, Mr. Oshoma. Now, what's your general assessment of the CBN's decision to retain the monetary policy rate for the third consecutive time at 27.50%? Now, especially considering the recent inflation figures. Now, at the moment, we have MPR rates that is higher than inflation rate.
Thank you very much. I would say it is quite concerning, the decision to maintain rate, but also at the same time, you also want to understand the reason behind the decision to maintain the rate. Because when you look at the fact that we have experienced some moderation in inflation, so a lot of persons will be expecting the CBN to do something about reduction in rate, so that to encourage growth in the economy. Or when you look at the fact that the rate is quite high, that will also stifle the ability of businesses to borrow. But you also look at the other part of it, the reason it has to do, I think the major drive for maintaining the rate is because of the foreign exchange market. We have seen some level of stability in that space, and the fact that CBN knows that anything that affects the foreign exchange market has an impact on inflation. I think they'll feel that, okay, we can sacrifice that area, sacrifice growth at this stage to be able to maintain stability. You know, also with the fact that we have seen a reduction, maybe say downward trend in the price of oil. And you know that the major source of foreign exchange for Nigeria is the income from oil. So when we see the oil currently trading at below our budget benchmark, I think those are those factors that the CBN is looking at. So I think the major one that people would have expected the CBN to do is the fact that the CR was maintained. People would have expected that the moderation would have started from that area, because maintaining the CR at 50% is quite high and has a major impact on banks.
Now, do you believe that the current monetary policy stance is the most appropriate approach to address Nigeria's inflation, particularly food inflation, which has been high for a very long time?
Yeah, if you say is the most appropriate stand, I think that has to depend on the way you look at it. Because when you look at CBN's effort at managing inflation, bringing down inflation, a lot of the things that the CBN is doing may not be achieving the expected goal. People will tell you that despite the high rate, we are still seeing inflation moderate significantly. We have in the basin early part of the year that so people I will tell you that the price of commodities are still high. But the other side to it is that to manage economic situation, you have the monetary policy side and you have the fiscal policy side. The CBN controls the monetary policy side, and as much as possible, they will deploy the various means to manage inflation. But we have not seen much in terms of the fiscal side. There is a lot of action that is required from the fiscal side because a lot of the issues with inflation are beyond the CBN. When you talk about the food inflation, we have to talk about the insecurity. The CBN doesn't manage that space. That have to do with the monetary, the fiscal policy. Then you also talk about the needs to use trade to be able to increase our efforts in terms of policies that will encourage production and also be able to export more. There's a limit to what the CBN can do in that, so that has to do more with the first fiscal policy managers. I think to some extent CBN will always and sometimes they get to the limit which people usually complain about. But I think if there's a more comprehensive approach and we see more action from the fiscal side, we'll be able to achieve more with terms of the approach, in terms of our current economic management approach.
Now let's talk about the manufacturing sector now, because they've raised concerns. How does this high interest rate environment impact the sector in terms of borrowing, production cost, and competitiveness?
Yeah, it impacts them a lot because you and I will agree that Nigeria is already an environment that is quite tough for businesses. They have to provide a lot of things. They have to take in a lot of cost in terms of making sure that they produce these goods. And their ability to borrow will definitely be stifled because when you look at their borrowing costs, currently we have MPR at 27.5, and you have the asymmetric corridor at on 500 plus 100 minus 100 basis points. I think that definitely will impact the rate of borrowing. And definitely in their production, they will have to factor in that rate. And when these goods now get to the market, definitely going to be at a very high level. And also considering the fact that a lot of Nigerians are already grappling with low disposable income. So a lot of them, their volumes will be affected. And definitely borrowing at a high cost definitely affect them. And you also have other costs in terms of salaries and also fixed costs that they have to take care of. I think it's something that they have been shouting, and they are the ones that would expect that the CBN, number one, the most that want the CBN to actually start bringing down the rates so that we're able to grow their businesses.
Now, the Manufacturers Association of Nigeria has also raised concerns about reduced capacity utilization and rising unsold inventories. What will you say are the broader economic risk of this trend that the Manufacturers Association of Nigeria have mentioned?
Yeah, the impact is that when you have low capacity, when they have low capacity utilization, it means that a lot of persons' jobs will be affected because they will not have to maintain because human cost in some areas is a variable cost. So when they are not able to utilize their facility, they are not able to produce as they we'd like to, as they have the ability to do. They will start looking at cutting costs. That has an impact on the economy. That will definitely be increasing the unemployment in the system. And also, you also know that when their production capacity is affected, it will also affect the tax, the ability, the income that they will earn, and also the tax that government, especially when the government needs the funds to it. So it is a win-win situation for both them and the government when their capacity is increased, because they will be able to employ more, reduce unemployment in the system, and also increase tax. And so the socio-economic system will fare better when their capacity is increased. And when there's reduction in capacity, it doesn't have tell well for the socio-economic future of the country.
Now, I would like to know, Mr. Shoma, do you think there is a trade-off between inflation control and economic growth in this case? And do you also think that the CBN, that's the Central Bank of Nigeria, has struck the right balance between this?
There is a limit to what the CBN can do. So as much as possible, because price control is one of their goals, as much as possible, that is their major goal. Because like I mentioned, if with the with the current price reduction in price of crude oil, that trading below our budget benchmark, definitely there is an impact on that. Our forex, because that's the major forex earner for Nigeria, oil. So when there is an impact on the price, definitely it will have an impact on the stability of the forex market. So the CBN is trading the economic growth for stability in the forex market. And to some extent, it also have an impact on inflation, because one of the things that made Nigerian inflation to go to a record high of 30-something% last year was the devaluation, because Nigeria is an import-dependent economy. So when there was a constant rise in the exchange rate, definitely there was high inflation. We have seen some level of stability, and CBN is trying to see how far we are able to maintain that stability, because we need foreign investment in the country, portfolio investors, and that's one of the things that they are looking at. When there is a pressure on the outflow, when foreign investors start pulling out their funds for foreign portfolio investors, I think that will have an impact when there is already an impact in the area of oil. So I think those are the factors that the CBN guys. So in the long run, to them, it will help them achieving the stability, which is one of their price stability, which is their primary goal. Like I said, we need to see more from the fiscal side, because you cannot use only monetary policy to maintain demand, in terms of to maintain demand stability in your exchange rate. We need to see policies that will increase growth and exports, so that government can do policies that will reduce imports. That means we'll be less import dependent. We can be able to produce a lot of things locally and cut off importation. We also need policies that we're able to take advantage of commodities and services where we have comparative advantage, so that we're able to export more and end that. It could have been worse if we were still importing a significant part of our fuel in Nigeria today. But with the coming up of the Dangote refinery and some other refineries, our importation bill has been reduced. So I think that is one way we have been able to maintain, one of the things that have contributed to the stability in the forex market. So I think we should be able to reduce some of the things that we import, and also be able to export more. That is the only way we can sustainably have an exchange rate whereby we can be able to go down some of this policy. CBN will be able to will not be at the front end with their policy to be able to manage inflation.
So now we've seen the CBN hold the MPR steady for 3 consecutive times. What fiscal or structural policies do you think should complement the current monetary policy to support manufacturing and real sector growth?
I think one policy that the government can adopt is engaging the manufacturers to look at how they can assess, or maybe the CBN, they should go to give them some opportunity to assess soft loans, credit at a lower rate, or give them some tax breaks. I think whereby they'll be able to recoup some of their costs. Well, whatever can reduce costs for them, because like I mentioned, one of the things that the manufacturing in Nigeria, manufacturers in Nigeria have to grapple is you have a lot of costs, like you have to take care of your energy. So I think policies that will help bring stability in the energy area sector, in terms of power sector, I think that will help. Then also look at other infrastructures they have to build in terms of roads, things that will reduce logistics. I think if the cost is reduced, I think they will be able to produce more. I think government needs to bring out policies that will take care of this and enhance, because they are always engaging with the manufacturers. I believe that manufacturers have been able to tell them there are areas of needs. But like I mentioned, these ones I've mentioned and the other areas, reducing their cost is one of the things that we need because it's quite tough. If you look at it, in the last few years, in recent years, we have seen a lot of companies exiting Nigeria and that is because of the high cost of doing business in Nigeria. So if the government, while the CBN is looking at using monetary policy, if the government brings us policies that we target reducing the cost of doing business and we see significant progress in that area, I think it will be a win for the manufacturing sector.
Now, let's talk about the government now. How do you think the government and even the private sector can work together in collaboration to reduce pressure on foreign exchange and also support backward integration in the manufacturing sector?
Yes, like I mentioned, it just have to do with making business, making the environment for business conducive. Like it is said generally, the primary goal of government is to make the environment for business to be more friendly and conducive and allow private sector to grow the economy. So if government makes that its aim and we start, because Nigeria have a lot of infrastructural deficit, and if we are able to see more moves in that area, because most times the government also see a lot of borrowings from government. If we can see more investment in infrastructural development and also bring out policies that will unlock the opportunity, because beyond government, because most time the government is looking at building infrastructure, I think with its policies, it will be able to unlock the opportunities for private sectors to participators to come into that space. And by then, you can be able to reduce the cost of business for the manufacturing sector. And also with some policies, they'll be able to, which can involve tax breaks, can be able to encourage the manufacturing sector to be able to engage in some of those backward integration. Because, for example, I will tell you two moves that are, when you look at where Nigeria is currently, some policies in the past that have really helped. One was the policy of the cement sector. There was a time Nigeria was an importer of cement, but through policies by the government, we're able to promote local production of cement, and today we are an exporter of cement. When you also look at what has happened in the refining sector, coming up of the Dangote, you know that Dangote's refinery enjoyed a lot of support from both the CBN and also from the government. And as we look at what we have been able to achieve and the impact is having on the economy. There are other areas I think the government needs to look at so that you will encourage private sector to invest in reducing our infrastructural deficits and also grow the economy.
Now, just before I let you go, Mr. Oshoma, looking ahead, what is your outlook for interest rates, inflation, and economic recovery in the next 6 to 12 months?
If you look at what is happening in terms of rates, why the CBN has maintained the MPR, but when you look at the Treasury bill rates and also the bonds that the government maybe will notice that there have been a downward trend in those rates, which tells you that it is expected that we experience a downward trend in rates at the remaining part of this month. It's not a question of whether the CBN will start cutting rates. It's a question of when it will start cutting. It was expected in this last meeting, but the CBN, based on other factors we have mentioned, decide to maintain rates. We expect to see them start cutting rate by the next MPC meeting if we continue to experience a downward trend in inflation. And as long as there's stability in the FX market, we hope to see a downward trend. And also as we get into the harvest season, during the harvest season, a lot of those prices of agricultural produce there'll be a reduction. I think that's expected to have an impact on food inflation and also the general inflation, which will definitely put more pressure on the CBN to start considering rate cuts in their next meeting.
Well, financial and economic analyst Mr. Vincent Oshoma, thank you for joining me on the program. Well, that's it on this episode of the program. Many thanks for joining me. I'm Okbayemi Obosheni. See you next time.